Hi guys, so this is my second strategy of trading. This is how I would approach it, and this is essential to every trading strategy. This is what you will do every single time, and you have no buts, no no's. This is what you have to do every single day of trading. Go to the daily charts, mark up the all-time highs, okay? Keep it there, doesn't matter. And then mark up the buy-side liquidity, then the closest buy-side liquidity to you for that day. There you go, I marked it up. Mark up the sell-side liquidity, done. And mark up any liquidity voids, which are called as a volume imbalance. I would rather mark them not as like a box. No, mark them as a volume imbalance high, imbalance low. How I would do that is a close of the candles. I want to see the bodies. So the higher body closed, okay? I mean, not the closer of the body. I want to see where there's a gap. So from this down here all the way there, those candles bodies, okay, opening and close. That's where I would mark the volume imbalance. Okay, that is done. We move on to the next one. I go to the daily, to the 4 hours. So this is the 4 hour chart. I see how my buy side liquidity is being taken up by this wick, giving me a bearish order block. So how would I see this bearish order block is that there is this up close candle, okay, followed by a very strong down close candle. And where does the price do? It goes to that down close candle, trades right through it, okay, to the point, okay. It trades to it by the tick, okay, by the tick, okay, by the tick. It ticks it and then starts to rally down. So that's the first order block we look at. And then there's another series of order block. As you can see here, there's a series of order block that's targeting this liquidity, all right? So that's how we are going to do it. That's a series of order blocks that we are looking at. Another series of order blocks we see it is that this bullish candle is followed by a strong bearish candle. So the bearish candle has to go below the opening or below the bullish candle, and that bullish candle becomes the bearish order block, okay? So we see it here. Price does not go beyond to take our stop loss. No, we are safe and continues to rally downwards. That's if you're doing swing trading, okay? If it is near to the end of the day, I will not take this trade. I'll just leave it. I'll just understand that on the upcoming day, we will have a gap, liquidity gap. That liquidity gap will be followed to be closed on the subsequent days. So the next week, when I'm targeting the trades here, I'm aiming for lower prices. Where do I aim? At the sell side liquidity that we found on the daily. Okay, so that's the first series of order blocks done. Now, what I would look at is the series of order blocks that will take my price higher. So there is my first order block there in this area. We have a down close candle, which I'm looking at is this one, the specific down close candle, followed by a strong bullish candle. Okay, this is where the order block is lying. So the order block is there, price immediately jumps forward. But if I see that the price does not give me any intuition or any updates over here in the 4 hours, since the trade is already followed, since the trade is already done and it doesn't retrace through it, that's a continuation, all right? We have a continuation. Price could actually reject off on this bearish order block as well, okay? It could reject, provide us even lower pricing to reach to this bullish order block again, but we'll just have to wait and see. This is what the underlying conditions that I'm laying out. So whenever we are entering on an order block trade, I'll explain in a bit. I'll tell you where to put your stop loss, and I will tell you where you should enter exactly and how you should manage the risk. I don't want you to enter using the 4 hours or the 1 hour. So for example, this is 4 hours, I'm entering here, but your stop loss will be there, which is quite a huge stop loss, around $30. Your account size will not hold it unless you have a very huge amount of money, and you can do the higher time frame trades. This higher time frame trades is formulated for institution traders where they have deep pockets. Okay, moving on. Since our liquidity is taken out, we expect a reversal. All right. After that, I go to the lower time frame. After I mark the order blocks, as you can see here, the order block can also be identified through two down close candles, followed by a very huge up close candle that will swallow them up. Okay, as you can see here, swallows them up, takes them out. So I understand that these two down close candles are a bullish order block. Price returns back to it. As you can see here, there's a very tiny wick. The wick through this order block box that I have laid out, takes in orders and then continues to rally upwards. Where's my first target? The volume imbalance closure. This volume imbalance closure. Okay, move on to the next slide. I go zoom in, identify the order block, clarify it even furthermore. Is there any other order blocks that I may not see? No. I go to the 1 hour. I check the 1 hour chart. What happened in the 1 hour chart? I see that there is a consolidation here. All right, there's a consolidation there. So price consolidated at this range, and we have identified it as an order block. So whenever we see this consolidation, this is where institutional traders are gonna put a huge amount of orders over there. They're channeling their orders. They're pushing in even further orders. That's why we have a zigzag momentum like that. Once the price breaks through it, okay, the orders are already saturated to the buy side, the market will start moving. Okay, the market will start moving to the upside. We had actually another order block that's resting here. We could not see it on the 4 hours charts, but in the 1 hour charts, we had clarity on it. So that's why I'm telling you to go on a higher time frame to the lower time frame so that you don't miss out on the order blocks. If you enter this trade here at a 1 hour time frame, you would have gained around $30 to $40 as well. Okay, so the order blocks that come in a series are very powerful. As you see here down, we had two order blocks that coming one after the other. So these order blocks are quite strong and they push the markets even higher. Okay, so now let's go to the trading view. Let's identify those order blocks in the lower time frame. In the 5 minutes chart, if I go to it, let's go to the most recent one, which is over here. Okay, I have the volume imbalance there, volume imbalance low, volume imbalance high. I'll go look at this liquidity. So where does my day start? I would like to trade during London's session if possible. So this is the London range. It already passed me. There's a huge momentum taken out. So there's consolidation. This consolidation is present there, okay, for a reason. There's a 2 a.m. to 5 a.m. So that's an ICT kill zone, London kill zone. This happened on Friday, this Friday. So how did I know the market is going upwards? Is that we have an order block there, okay? That's an order block. Let's set it out. There's your order block. I would put my stop loss here. I would enter 5 contracts and I put my stop loss right below the lows. Here, right below them. Yeah. And how I would target it is that, is there any sort of liquidity on the left side? Yes, this is my liquidity. I'll put it like that. And how much is that? $20. That's it. I'm satisfied. I exit the trade. And as you can see here, as soon as it takes that liquidity, it extends slightly and then it drops back. And then starts to consolidate and do for me a ranging movement. All right. I do not like to participate in this movement here. I would like very clear, concise movement that will go take me in one direction and end the trade immediately. That's it. Okay, this is how you do your trades. If you do not enter at this entry here, you'll have another entry there. Okay, another entry there. But if you put your lows here, you'll be risking it. You need to check the first order block. Okay, this order block that's created here, this is where you add orders. You're adding orders to your trade. There's another order block here where you could utilize it and put your stop loss there, okay, or below the first order block lows there. Price trades back through it and then rallies immediately, as you can see here. This is what I call a series of order blocks. when we have a series of order blocks taking us into a certain direction, okay, and price does not give us a bearish order block above, okay, I don't want to see a bearish order block. You have already taken out the stop run on a high time frame. Now it's targeting only higher pricing. Series of bullish order blocks, you take the long trades. This is how you do it, and you're risking only $3 to $5 compared to the $20. That's amazing. Just count it. You have 5. Okay, you have 5 contracts here. You're taking out $20. Okay, and I'm not targeting any price or removing. No, at $20 I'm removing 5 contracts. That's it. Okay, because I saw that liquidity. I'm taking it off. $20 is enough for me. That's crazy. 5 times 100. Okay, every point in the gold futures is $100. 500. Okay, 500 times 20. How much is that? How much is that? That's $10,000. $10,000. Okay, I'm satisfied. I close the trade. I'm out. So this is the series of order blocks trading strategy. Whenever we have a consolidation movement, you just be careful on that one. Okay, as soon as that consolidation starts to end, we're gonna have a very strong price action taking us into a certain direction. I don't care if there is news, I don't care if there is anything, but there's only certain types of news that I don't like to trade through, is the NFP news and the FOMC. Also the CPI. I don't like to trade through these news. Whenever news is happening and I see a bullish order block over here within this range, and the price did not swallow all the way high before the news, then I would not be part of the trade. So if I had to see the order block here and there's a news session, I will not take that trade because this trading strategy would not work. Okay, so see you guys next time, and I hope you're doing well. Yeah.